exploring the investment landscape with a guru's wisdom and a strategist's insight. Good Life Companies presents The Market Enthusiast with Noah Brooks and Chris Needs.
Welcome back to another episode of The Market Enthusiast. Do we have anything to be enthusiastic about today, Chris?
More all-time highs.
All-time highs. They just keep coming. I think it's 45 or 46 for the year. I feel like a broken record. There have been so many people poo-pooing this rally over the last 2 years, telling you all the reasons that you shouldn't be investing. And here we are, up 22% for the year on the major market. It just keeps getting better and better and better. And we have all of these things kind of on the peripheral that, don't sound particularly great. We have an election coming up. We have mass amounts of debt. We have earnings that are flopping around a little bit. We have high interest rates, and yet the market continues to run.
Yeah, I mean, the very surprising part is we finally got those rate cuts we were waiting on for so long, and boom, yields start going up on it. Mortgage rates are up 0.5% over the last month since the rate cut.
Yeah.
You have the expectations for Fed funds rate end of year 2025. We were expecting in the market about a month ago 2.8%, and it's all the way up to 3.4% now. So there's some expectations being adjusted, but the market is just chugging right through.
Yeah. It seems to me that the large cap tech, the Mag 7, is, I don't want to say it's not important, because it is, and it makes up a gigantic portion of the S&P 500 as well as the Russell 1000 growth. But it's not necessarily leading the market anymore. So I have the data right here. I pulled it today. 5 of the 7 out of the Mag 7 are underperforming the S&P 500. The 2 that aren't are Meta and NVIDIA. NVIDIA is up 160% for the year. Meta is up almost 70% for the year. S&P total return up over 24% for the year. Amazon up 23, Apple up 20, Microsoft up 12, Alphabet up 18, Tesla down 12 for the year. How was that robo-taxi launch?
Ooh, there was a lot of hype behind it. They kind of postponed the robo-taxi launch from, I think it was originally supposed to be in August, late August. And they had it last Friday, and it was like a 10 p.m. start. I guess maybe it was on the West Coast, but wasn't received that well. The stock was down 8.8% the next day. I guess they expect production of the robo-taxi will be out in 2026. If you know Elon Musk, those deadlines are movable. But they also debuted the Optimus robot. Looked pretty cool until we found out it was just remote controlled by someone in another room, and it wasn't AI powered.
This
like
is
it was
the thing
being
that
sold
looks
as.
like the Terminator a little bit.
Yeah, it looked like it was from iRobot.
Yeah.
Yeah.
And it didn't go so well. I didn't see that.
Elon says Optimus will be the biggest product ever.
So just for our listeners, describe to us what this Optimus looks like.
I mean, if you've seen iRobot, it's essentially that. It's
How about for the people that haven't seen iRobot?
It just looks like a human with like a weird black mask over their head.
A humanoid.
A humanoid, yeah.
A humanoid robot, 6 feet tall. That looks like something out of your nightmares, quite frankly.
Kind of, yeah.
Right? It doesn't look happy and healthy, and doesn't look like
if it'll do my dishes, it's okay. I can deal with the weird factor, but
yeah, it looks creepy as all get
yeah.
out.
They had them like serving drinks, I guess. That was one of the things, playing like cards and stuff. Interesting.
I don't know that I need a robot at home. I wouldn't mind a robot lawnmower. And we have a robot vacuum, right? But I don't know that I need an actual robot, at least now. Would you have a robot in your house? Like a humanoid robot?
To do all my chores? How much?
I'm not in love with it. I'm not in love with that idea. So going back to the Mag 7 for a moment, I think what we're seeing here, NVIDIA is up. It is at all-time highs actually this week, 136, 137 yesterday. But what we're seeing, again, we keep talking about it, is this rotation into the rest of the market. The equal weight S&P 500, even though it is not up 24% like the total return regular market is, it's up almost 17 for the year. And it was at one point it was trailing by 15 or 16%, and now it's trailing by 7 or 8%.
Back in July, it was barely positive.
Yeah, I mean it really really moved in the third quarter.
Yeah.
And so it just seems like this is really healthy for the expansion in the market. And I mean, I suspect a lot of that has to do with interest rates coming down, even though rates, you mentioned mortgage rates came up a little bit, but overall rates coming down, businesses paying less to borrow capital. And some of those companies that were really affected by the higher rates were those smalls and mid caps. But it's a little bit strange because the equal weight S&P 500, these are all still large cap companies. They're the smaller large cap companies, but they're not small. It's not like they're, $50 million. You're talking $50 billion or $35 billion. But they're impacted by rates as well.
Yeah, definitely. I mean, we've talked about, what we've seen utilities and real estate do, industrials do, and those are I guess, maybe more rate sensitive, or maybe on the industrial side more cyclical. But they are big fans of those rates coming down. And funny how we've seen rates sort of tick up. Utilities, at least last week, were the worst performer.
Yeah. I mean, they're still up almost 27 or 28% for the year, right? And up 20% or 19% for the quarter, for the third quarter. Is it just that rates are coming down that utilities are shining, or is it also the need for more electricity?
I think it's both. I mean, we go back, and anytime we can feed into the soft landing narrative where we just got a bombshell jobs report.
Yeah.
I mean, that would signal we're not slowing down like the numbers we got the previous 3 months. That's a good thing for the economy as a whole. That's also sort of propped up rates along with the CPI report we got. We'll certainly get into that. But I think it's all the above, a little bit more demand. That's going to prop up and move up GDP.
Yeah. You mentioned jobs report. So it came out, it was positive 245,000. The prior 2 months were actually revised upwards. And we've been in a series of downward revisions almost the entire year. So it was nice to get a little bit of tailwind there and to really get something a little bit positive. It feels like maybe that was the change that we needed to take people going from, well, it's going to be a hard landing, to, hey, it's probably going to be a soft landing, because the jobs are still being created. Now, I had made, I don't know if it was a silly comment, but I said something about job growth picking up after summer, maybe 2 or 3
September
months ago.
Seasonality.
Yeah, seasonality. And it does seem like that is a seasonal phenomenon. So obviously, everybody's going to wait till the next one to make a determination. But it really does feel like this could be a soft landing to a no landing scenario here. The Federal Reserve has threaded this needle that everybody was worried. I mean, they came in, they whacked us with this giant hammer, this 1,000-pound hammer, gave us 5% interest rates after 0% interest rates for a long, long time during COVID. It doesn't seem to have the effect that some people thought they were going to have. Last year, Michael Burry, he's the gentleman who called the mortgage crisis, right? The global financial crisis. Everybody remembers him from, what was the movie they made about him? Or he was in the movie, The Big Short, right?
Yeah.
He came out on Twitter in January, first week of January of last year, and his basic tweet was sell. The market's up 60% since then. I mean, there's a lot of reasons not to invest, but if you have missed that move off the lows from whether it was 2022 or even off the lows from last year in 2023 in October, I mean, you really aren't going to be able to make that up. That is going to damage your lifetime returns, is missing a move like that.
And you really have to be careful listening to these people who became famous on a short call that hit, because they fall into normal human behavior. They're going to be chasing that same call again because they want to show they can do it over and over and over, and obviously it didn't work out for him this time. But always take it with a grain of salt when someone's famous for one individual call or calling one macro event. they're going to try and relive that, and they might be,
I would.
yeah, might be a little sensational in their estimates or their outlook.
Yeah, and it seems like you maybe go back to the well, like your bias is, I did this, I got it right, and I think it's going to happen again. Like who's Dr. Doom? Nouriel Roubini. He's always calling for the end of times and the market is going to crash 50%.
Any
from
given
here,
month, you can see
right?
an article from him saying that.
Yeah. And if you're always saying that, I guess you're going to be right occasionally. You're right in 2022 when the market's down 20%, but you're not doing the average investor any justice. You're really not helping them build wealth over time. You might be helpful to the shorts. You might be helpful to people that trade on a really short time frame. And I don't mean intraday, but like people that are short for the week or for the month. But for the average investor that we work with and our financial advisors work with, we're looking at a 10-year plus time frame. And those bear calls and the sky is falling type of stuff, that's not helpful for long-term returns for our clients.
Yeah, and like you said with Roubini, he may be calling for a 50% drawdown, but if the market goes up 150% in that time he's calling for it, you missed out on 100% if you're right.
If you're right. I'm going to go back to the well, don't bet against America. I think it's a bad thing to do. There are lots of reasons why you could point out that things should be worse, but here we are sitting at all-time highs. I've been reading some things that point to when the market's up during an election year, especially the 3 months before the election, it's positive for the incumbent. I'm sure there's data points out there that suggest otherwise, but that's the general consensus that I've seen over the last 30 years, that it's positive for the incumbent when the market's up for the 3 months prior to the election.
Mm-hmm.
And I don't, certainly we don't know. We're 20 days away from the election.
Yep, under 3 weeks.
There's some significant differences between the candidates. The market doesn't seem to care who's going to win or who's going to lose. It's really strange to me.
You'll hear talking points from, financial media, but yeah, the market isn't showing a sense of fear right now.
Yeah.
It's been fairly risk on lately.
Yeah. Bottom line is, though, that earnings are up pretty dramatically over the last few years, and the prices that we pay or we're willing to pay for stocks are a function of what their earnings are. And so if their earnings continue to rise, we're going to continue to be buying common stocks, right? Yeah. So we talked about energy. We talked a little bit about utilities. There was an article out this week suggesting that Google was going to be looking into and possibly have agreements in place with some micronuclear reactors, 7 specifically from a company called Carios. Did you look at this at all?
I did see that. They're looking at, I guess, 7 modular reactors, which they're not the quote unquote 3 Mile Islands. They're much smaller, but they could use them to power, I guess, their data centers to sort of make themselves a little insulated from the outer power grid, I guess, is the goal. And modular reactors are what we hear to be possibly the future of nuclear power. So I would like to see how that ends up working out for them and seeing how scalable these modular reactors can be.
Yeah. They're the little ones that you put in the ground, or is that not the ones that are?
I don't know exactly for the placement of them, but my understanding is it would be like a 10 by 10 box, obviously somewhat contained and what have you, but that's sort of the footprint you're looking at is like a 10 by 10 type area.
Yeah. Well, that's not a traditional reactor, right? That's a micro reactor. And it seems like you could put that anywhere that would allow you, right? Any township or any state that would allow you to do it. You build your giant warehouse of data and servers and backups, and then you just put your power station not right outside the door, but a few hundred yards away, a mile away, and there you have it. And you don't have to worry about being connected to the grid. or having a power outage or any of that stuff.
Yeah, someone was talking on Bloomberg this morning, and this is the name of the group that's pushing for is Mothers for Nuclear Energy. I'm like, what on earth? It's interesting.
I remember Mothers Against Drunk Driving in the 80s. Mad.
Well, now they're for nuclear power.
Oh, that's crazy. I mean, the fact of the matter is, in 100 years from now, we're probably not going to be burning oil for power, right? It's going to be solar, or it's going to be nuclear, or something that isn't out at the moment. Cold fusion, right?
I'm sure science will pick up. And I mean, the biggest thing against solar is we don't have a way to efficiently store it, I guess, to account for how the grid uses and fluctuates during a day, as consumers use energy differently, obviously, at times a day. So as we get that all, science is amazing, as we know.
It actually is. I'd just like to say, in terms of the storage, it's going to be digital storage, right? And so for people that aren't familiar with that, your battery in your car is a traditional, like a lead acid battery, some type of chemical reaction in there. And digital storage is like in your cell phone or in your computer RAM. Instead of keeping data on it, it's going to keep little electrons on one of these tiny little nanoparticles. And really, when we get to the scalability of that type of stuff, these conversations about charging and recharging are going to be out the door. It's going to take you, a minute or two to charge your entire car, and it'll give you 500-600 miles without thinking about it. We're not there yet. And the scalability side of it is they'll be able to do it on a small scale, but they're not going to be able to do it on, a county-wide scale for a long time. But it is coming.
Speaking of technological things, we already hit on Elon Musk, but how about them catching that booster right out of thin air?
Yeah,
that was pretty cool.
The little chopstick thing.
Yeah,
I watched that.
Yeah.
For people that didn't see it, they sent a booster up, or they sent a rocket up. Booster fell off, and then came back down, and they actually caught it from the same spot that it had lifted off from with these little chopstick things.
Yeah, they previously did out in the ocean. They would catch it. I don't know how that could be.
What's the point of catching the booster?
Quickly recharging, I guess. Refill it. And it's right there on the spot. They don't have to haul it in from somewhere else where they preload it.
I get the idea of catching the shuttle, right? That would be awesome if you could just go up and it comes right back down with something else in it, or landing in that instead of landing on a runway type style like Cape Canaveral. But I didn't necessarily follow the rationale of catching the booster other than reusing it.
Yeah.
And I wouldn't want to be in a reused rocket. I wouldn't want to be in a reused rocket. That doesn't seem appealing to me. So data centers have really transformed over the last 20 years. It's where all of our data is stored, right? It used to be you were storing everything on your computer, your laptop. Now, I don't know that anything that I do is stored on the computer itself. It's all stored somewhere out in the cloud.
Yeah.
It's a transformative technology over the last 20, 25 years. And I don't know that it's going to ever disappear. And we're not going back to everybody storing everything on their hard drives, right?
The only downside to all this is think about Hurricane Helene and all the areas without power for so long. Say we're in a cashless society, in a fully digitized society. Well, that electricity goes out. You're done for. You can't run your business. You can't do any of these things. You can't swipe your credit card. You can't access your data.
That's why a terrorist attack on the grid or a complete denial of service from internet, it would be devastating.
Mm-hmm.
I mean, we would be SOL across the board, so many different ways. I mean, we had, I should say, we had a substation. Yeah, we had a substation that blew up this morning here locally, and we were without power in the building for about 35 minutes. And some of us have backup systems but it's really just meant to.
You have a backup system.
Okay, I have a backup system.
I was
but
twiddling my thumbs over there.
It's just meant to be able to shut down your work, close it down, and turn the computer off. It's not like you can continue to work. But I mean, at that point, with no power, you're done. We don't have the capability of really doing anything. We can go find a spot that does, which is what we were about to do before it got turned back on. But without power, we're done. You mentioned central bank digital currency. I've had a bunch of people ask me over the last few months. There's an electronic dollar that's coming, and my client wants to, somehow prevent the death of the U.S. dollar and wants to get out of dollar-based investments, and it's a real head scratcher. I know that China has a vested interest in creating a digital yuan to track its people. And one of the things that I've read about it was with a digital dollar, they were tracking the people, and apparently they have something similar on their phones that it's, like a currency app, if you will. But they were tracking the people that were going to the protests. They were taking the subway or train to these protests, and they could easily see who was going to the protests, the Hong Kong protests.
And they can shut people from accessing those trains and subways and whatnot too.
Yeah. So that, I mean, to me, that's Big Brother. But not everybody. A lot of people are asking about central bank digital currency. And I mean, the fact of the matter is that we're probably going to have a digital dollar at some point in the future here in the US. I don't think cash will ever completely go away, but you do hear about businesses that aren't taking cash. Traveling a few weeks
other than investing in like different blockchain technologies, I don't know how you would invest to prevent that, though. I don't know what the thesis would be like.
What I said to the people that were asking this was, well, does the client want to invest in China? If they don't want to invest in dollars, what do they want to invest in? And then there was a pause, and they were like, oh, well, I should bring that up to them. It's you can't really not. You can invest in euro-based companies. You can invest in all sorts of different international currencies, but you're not really going to get away from the U.S. dollar. Gold's traded in it. Most of the metals are, certainly oil at the moment. And yeah, I think China and Russia have a vested interest in moving away from the dollar because we can hurt them with
we essentially weaponized it when we did those sanctions on Russia. We locked them out and sort of held those funds.
Yeah, when you sanction them, it's because we have the dollars and we stop letting them trade in dollar-based items, goods, right? Like oil, things like that. So the more that they move away, the less power or control that we have over them at some point in the future. And I think China's well aware of that, right? But for clients out there that want to not invest in dollar-based goods, services, and companies, I just don't see how that's possible. Bitcoin, I'm not doing it. I'm not doing it. So we talked a little bit about the jobs number that came out, 254,000 with a little bit of revision. What do you think the next month is going to look like?
I think we'll go back into like a high 100,000s on jobs. It won't be a bad number. I doubt we're going to see a low 100,000s. I think there's still a little bit of a seasonality lag here. People do tend to go back to work when kids go back to school. It's just easier to do, whether it's part-time or full-time. And as you know, that's not delineated in that headline number. So I think we'll have another decent month. A lot of companies are hiring for the winter season, the holiday season as well. I mean, Amazon just announced they had their biggest October Prime Day event, in their history. Obviously, with inflation, things going up, you would expect it to be larger, but just another confirmation, the consumer spending. So between that and holiday ramp up, I think we're going to have another decent jobs number.
So you're in the no landing camp.
I don't know if I would go that far. I think I'm in a soft landing camp. I think 2025 is where the rubber's going to meet the road and we see where this cycle is going to go.
Yeah, no question about it. 2025, is likely to be more volatile than 2024. This year, we've had two drawdowns. We had a 5.5% drawdown with regional banking issues in early May, if I'm not mistaken. And then we had an 8.5% drawdown, from top to bottom, from peak to trough in August. And then boom, off to the races.
Yeah.
Right. I mean, so sitting at all-time highs this week, everybody that I talk to is anxious about the election. It's a giant election for the United States and, quite frankly, for the world, right? I mean, it always is, but this one is probably elevated to a spot that we haven't seen before. I said it earlier, market doesn't seem to care who's going to win. Does the Mr. Market just want to get the election over with?
Yeah, I don't know. Maybe we'll see a little bit of a hangover after the election because we seem to be running up into it. We'll see.
I would give you that. It seems like, okay, the party's going to be over on November 6th. That's presuming that...
Normally the market likes certainty, so you would think it would be happy to have the election done, but I don't know. If we would keep running up like this, you're looking at 30+%.
Yeah.
Into a seasonally strong time of year. So,
yeah. We're in a situation where I think the one thing that could let the air out of this is if we get into an after the election, after Tuesday, that we don't know who the winner is, and somehow that becomes a prolonged scenario, and not just a day or two where they have to count the votes, but like if we get into it's Tuesday, so Wednesday, Thursday, Friday. I mean, if we get into the weekend and we get into Monday and we don't know who the winner is at that point, I think that would be bad for the market. I think people would start to take some money off the table if they
VIX spike.
Yeah, it definitely could be a VIX spike. It could be, I mean, there could be a lot of volatility if we don't know who the winner is for a longer period of time. No question about it. I'd like to see it. I would love to have a winner announced Tuesday night. Think that's going to happen?
I doubt that. Doubt that greatly. I think Pennsylvania has already come out and said they're not going to have the votes tallied on election night.
Is that right?
Yeah.
Greatest country in the world. We don't know who the winner is at the end of the day.
It's a Pennsylvania problem. We have trouble counting.
No. Come on now. You want to talk about bonds for a little bit?
Sure.
We're not doing so well after the Fed lowered rates.
Yeah, I mean, yields are ticking back up now. We sort of touched on the jobs report. We haven't really hit on inflation, but both of those things sort of buoyed yields up a little bit. Inflation, the number was 2.4 on headline, 3.3 on core.
Yeah.
A little warmer than expected. Goes against the trend, just sort of like the jobs report did. Going back to the jobs report, unemployment was up to 4.3, which technically triggered the SOM rule, and you heard all those things of recession indicators and things like that. But it's back down to 4.1, 2 straight months where the unemployment rate went down. So, we're getting a couple mixed signals here. On the inflation topic, we had a few things. Food is still up. Shelter's up 4.9 year over year. Health insurance is up 7.5% year over year. There's some, smaller topics. I just went to an Eagles game this weekend. So month over month, sporting events are up 10.9%.
Why do you think that is?
People must love football. I don't know.
I think it's the experience.
Playoff baseball too? I don't know.
It's paying for the experiences versus paying for some type of good, right? I just got tickets New Year's Eve, Madison Square Garden, and they're expensive.
It's so packed. Why would you want to do that?
Well, Fish has 4 nights at Madison Square Garden, so we're going to go up on the 28th and see a show. Cool. But it is definitely more expensive than it has been in recent years. There's no question about it. And I'm kind of one of those guys that are willing to pay up for those experiences. You're sitting at a concert or a game for a few hours, but it's a great memory.
Yeah.
Right? It's a great time.
Noah's a big Fish fan. I was just up in Vermont and I was in Burlington. I took a picture of the bar where they started out. I don't even remember the name. You probably know the name.
Well, the song Nectar was
Nectar.
from
Yeah,
that
that's
bar,
it. That's
right?
it. So I took a little picture, sent that to Noah.
But didn't you say there was a homeless lady sitting
Yeah,
outside?
I didn't want to get too close to the front. I wasn't going there. I had the kids, so I wasn't going into a bar.
Okay. On that note, if you're listening and you have questions, thoughts, concerns, topics for another podcast, please send them in. Market Enthusiast at Good Life FA. For everybody at Good Life, I'm Noah Brooks. With me, Chris Needs, and we will see you next time. Thank you so much for listening.
The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly.